Good morning, everybody. Welcome to the Flow Show. We kick off a new week. It's Monday, and we're heading into quite a big week of data. So, and events that are going on this week. So, lots to get into. Morning, Kay. How you doing, mate?
Hey, morning. Everything okay? Morning, Ryan. Morning, everybody.
Good, good. Have a good weekend, mate?
I was in Bath, moving my youngest one from one to another apartment. I'm actually feeling quite knackered.
Yeah. Shouldn't he be helping you out rather than you the other way around?
Sorry?
Shouldn't he be helping you out rather than the other way around?
Yeah, I know. Yeah, the jokes of parenthood, mate.
Yeah, exactly. Right, well, let's get stuck into things then. Not an awful lot on the headline front, but we'll go through what we do have. Right, China, they cut their LPR rate by 10 pips overnight, 10 basis points. Well, they cut the 1 year by 10 pips to 3.45%. They kept the 5 year unchanged at 4.20%. A little less than the market was expecting. They were expecting a 15 pip cut to the rates there. So they only went a 10 pip. So a lot less than the market expected there. That's got the market thinking again, perhaps that China are dithering around about actions for trying to stem the worries going on over there and the weakness, growth weakness and activity weakness that's happening over there. The only thing I'd say to that is that they've always said that they will not go down the road of, and they call this specifically, flood-like stimulus. So that really would be a last resort for those guys to come in, you know, with some of the big, massive interest rate cuts, if you like. You know, I don't think they'd even consider anything like QE. Helicopter money is something they might consider if they want to go down that route, but these are big moves if they happen. And so far, they've held off from that. That hasn't stopped a lot of other banks and institutions cutting Chinese growth forecasts for 2023. UBS and Citigroup are the latest out for those. UBS cutting 2023 GDP to 4.8% from 5.2%, and Citi cutting them to 4.7% from 5%. I think at the last shout, the official forecasts from China are for growth for 5% this year. So UBS were already above that number anyway. What are you making of this latest round, Kay? Is the market still getting a bit fed up that they're not getting out the big guns?
Yeah, and I think well, I don't understand why they didn't cut the 5 year LPR, because that's the rate that they use the most for the best clients and stuff to do loans upon. And if you want to kickstart your local economy and especially on the housing front and stuff, they should have cut the 5 year, and they didn't. So I don't think that's a very good thing that they did there. And the market is a bit scratching its head as to know what to do with it. I don't think it's the right approach, but yeah, they just decided, and it seems like, of what I read about it, that they really did do it with the weakness of the yuan in mind, which is which could end up being counterproductive in the end. And if you want to your local economy to start up again, they should have cut the 5 year by 15 BPs, but they didn't. So bit head scratching, trying to contain the yuan weakness, okay, but where their market needs it the most, they didn't budge. So I don't think it's conclusive, or I don't think it's really the right thing that they did. But okay, it's China, and we just trade what they do and not what they should do, right?
Yeah, exactly. And we've got to remember they are still doing a lot of measures at the ground level, you know, like changing the rules for mortgages and buyers, and trying to encourage things more on the ground rather than just going through monetary policy or other sort of policy like that. So there is a lot going on you know, cutting taxes on new vehicles, new electric vehicles and things like that. So doing lots of bits and pieces underneath, which they hope will stimulate the economy. I guess it's a question of time as to whether those small measures work significantly. But if they don't, can you see them then stepping up the fiscal and monetary policy
we
measures?
we have to also make a bit of a distinction here. This is not the PBOC cutting interest rates for the banks and everything. These are the Chinese banks, the loan prime rate, right? What they charge to clients, and that's where there seems to be a bit of a discrepancy in my opinion. And the thing is, if you can't afford a house, are you going to buy an electronic an EV? You know, I don't know. I mean, I'm a little in doubt that what they did today is really going to help much.
Yeah, and well, the market seems to be taking it that way as well. It's pushed up dollar China again this morning, knocked it up to 733s, but we just heard that they've been in tinkering. State banks have been in tinkering with the dollar yuan rate this morning, so that's also helped see a little bit of a sell-off coming in there as well. So they're continuing to intervene in markets there.
Yeah,
right.
Now they seem to intervene even in the liquidity of the offshore yuan, because that was the latest line. So that's the little dip that we saw there in the dollar CNH.
Yeah.
I'm just going to repeat what I said a couple of times last week. Is I think they really look at that band, because it's not a coincidence that we made it up into 733s, but not really 734s. Because the 2% on top of their fixing is somewhere in the low 734s. And I do think that we really have to pay attention to that top end of the band, even for the CNH, where the fixing is CNY and the band is CNY. The CNH is supposedly a free market, but it's anything but, as we know. So we have to pay attention to where they fix it and then where the top of the band is, because I don't think it's a coincidence that we stop right in front of it all the time.
Well, if they continue to intervene in markets like they have been during the European and US sessions, can't they only do it in CNH because CNY is closed?
I guess I trust so. The official CNY market is closed. Yeah. But then, you know, then they can always probably transpose it in the next session. They can do the switch, right? I reckon. In China itself. Hey, and it's China. They can just say like, yeah, we change the H to the Y, and that's it.
Get the Tipex out. Yeah, well, it's both their currency. They do what they like with it. But yeah, anyway, they're still continuing to intervene. I think that's the most important aspect of that. Right, so yeah, coming over to Japan, and the Ministry of Finance has raised its assumed long-term interest rate to 1.5% for fiscal year 24-25. That's up from the 1.1% set for 23-24, according to Kyodo. They've done that due to the rise in yields after the BOJ policy tweak. So it's not so much a change of forecasts because they think it's going there. They think it's just going to be a natural reaction from the YCC change at the Bank of Japan. Is it still significant, Kay?
Well, it's going to be significant for their for the funding of all their stimulus plans. But yeah, it's a reaction too. And if you look at the 20 and 30 year, because they talk about the long end, right? And if you look at the just a quick look, the 20 year is trading around 140, and the 30 is trading around 160. Yeah, 165. So yeah, that's we're already there. Okay, now I trust that they don't include the JGB 10-year into that, although they will fund it there as well. But yeah, it is in a way somewhere significant because they acknowledge that they will have to pay up. And then on the side of it, we saw the I don't remember who it was that raised the minimum wages. What is the
They've raised it 40, the minimum hourly wages they've raised.
Yeah.
The largest apparently since records began in 1978. The minimum wage has gone up an average of 43 yen per hour, which isn't a great deal. It's something like 30 cents or something in dollar terms.
No, but it's 4%.
Yeah, so not big in terms of monetary value, but in terms of percentage value, it's gone up quite a bit. And again, it's just another small step, isn't it? You know, they've raised their long-term interest rate forecast. They're raising minimum wages. We've seen private wages, if you like, going up. It's all these steps that are just the snowballs continuing to roll, isn't it?
Yeah, and yet, if you look at the yen, it's starting to weaken again, or albeit not very much, but it's still weakening a little bit again. So that means the market is now probably waiting for the next Ueda comments, which, by the way, I haven't seen that he was going to Jackson Hole this week. I saw Lagarde, Goolsbee, and well, Powell, of course, and Harker, but I didn't see Ueda yet on the program. Yeah, it's a bit of a strange one to read, really, to trade yen on the back of it, because if you say like, okay, this is going the right way, yen should actually respond relatively positively, but it again responds only to yields and risk.
Yeah, I think it's almost like we have cycles, inter-month cycles, isn't it? You know, get around to a Bank of Japan meeting and it all becomes important again. When we're nowhere near it, it loses importance, and we're trading other things. So, yeah, a bit of a funny one, but who knows? I think there's enough there to suggest into the next Bank of Japan meeting, maybe we start to get expectations rising of at least a language change. I doubt we're going to get another YCC change or anything like that, but there could be more, or there could be a language change that they maybe start to acknowledge the inflation persistence. You know, it's been ticking on now. We're not seeing that pullback that they were expecting yet. But yeah, maybe we'll get those expectations ramping up a bit ahead of the next meeting if we don't hear from His Majesty at Jackson's Hole.
It's as you said. I reckon we are going to see this kind of speculation going into every meeting now. It's still a month away. It's still only on the 22nd of September, so it's still a lot can happen in between. But yeah, that's what we already said, and I already said it's. I expect the market to speculate ahead of every meeting that they are for good going to normalize, right? But it's still a bit of time away, and the yen for now chooses to ignore it.
Yep. Right. Let's see what's not being ignored today, and that's asking prices for UK homes. Seen the biggest drop since 2018, according to the F.A.C.E, who, let's face it, are always a glass half empty news outlet at the moment. If there's a negative headline to be written about the UK, they're going to be writing it. But it doesn't change the fact that house prices have been suffering for a while in the UK and continue to do so. In other news, the ECB are a happy bunch, and they're preparing to send a letter. Ooh, doesn't that send a shiver down your spine? The ECB sending a letter. They're going to send a letter to Italy raising objections about the windfall tax that the government put on bank profits. That's according to Italian press late Friday. Apparently, the letter is going to criticise the fact that they put this tax on without previously informing either the Bank of Italy or the ECB, as it is supposed to do under EU rules. Yes, EU rules, always there to be broken as far as countries are concerned. So the ECB are not happy bunnies with Italy at the moment. Just coming out and looking at some of the data that we got from last week, not an awful lot, as you can see. Canadian PPI out, and not quite the dip as expected on the month. PPI coming in up 0.4%, was expected to fall 2.3%. Same on the raw materials price index, rose 3.5% versus flat expected. Year-on-year numbers also not coming in as soft as expected. So PPI in Canada may be indicating that we're going to see a little bit of inflation input from these numbers down the line. Could be a case that a bit like maybe in the US, we might have seen the year-long drop in inflation petering out a bit. Maybe we'll get a bit of sideways action or a little bit of gaining in inflation. So the same conclusion might be being drawn in Canada as well. We need to see whether that was just a one-off rise on the month or whether that's going to continue next month as well. So nothing to get too excited to now, but we always look at when trends begin. Not a lot else out as well. Some trade balance data from New Zealand. There you can see that house price index there from the UK. Germany PPI as well coming in lower than expected, so still some further disinflationary pressures to be seen in Germany. PPI coming in year on year much lower than expected, as did the month on month as mentioned. So again, that should be feeding into lower inflation in Germany as we roll the days away. Just a quick look at what's coming up this week as well. Some decent data. It's the start of the PMIs, the flash PMIs on Wednesday. So we've had a couple of regionals from the US, which showed mixed numbers. Now we get all the rest of the globe pumping out their PMIs this week as well. More housing data tomorrow from the US, existing home sales. We also get some Kiwi retail sales as well. Good old Eurozone consumer confidence. We'll see how dour things are in there. New home sales as well, Canadian retail sales. So a busy day for Wednesday. On Thursday, we get some ECB minutes, which might hold something, seeing we haven't heard from too many ECB members because they're all on their holidays so far. So maybe there's something in there we haven't heard as yet. Durable goods, jobless claims, as always, to keep an eye on. Friday, a little bit quiet. Michigan flash number coming in there on Friday. So we'll keep an eye on those consumer numbers and those inflation numbers there. Obviously in the middle, as Kay's been bringing up, we've got the BRICS meeting, which China's Xi will be attending. And then into the end of the week, we have the Jackson's Hole coming up. Any events you're looking out for in particular, mate?
Well, the PMIs are going to be interesting, that for one. And then, yeah, those two main events. The BRICS, I think the main question there is whether they are going to accept more members. And there's a bit of discord between India, China, I think Brazil is a bit reluctant as well to start to add too many countries. But as I said, there's one in particular knocking on the door, is Saudi Arabia, and that may have the market a bit, I don't know whether worried is the right word, or at least wanting to react to it if Saudi Arabia would join the BRICS. Apparently, the unified currency is not on the agenda, but the payments in local currencies may be on the agenda. And I think the major news that we will have to wait is to see whether Saudi Arabia is going to join. There's other countries, but that would be looking at its situation and what they can do with oil and things like that. That would be the main concern, I say, over in that meeting. And then, of course, yeah, Jackson Hole at the end of the week. It's a bit of a guess what Powell is going to say. I think he's just going to stay the line. I was actually looking at where the S&P was now compared to Jackson Hole last year, and it's actually quite a bit higher. The unemployment rate is at those levels that they were. So if you would compare one Jackson with another Jackson, there's absolutely no reason for him to go all mellow. Now we've seen that in the meantime, inflation is coming down. He's got a choice of which line he wants to walk really, but I think it may. So on the face of it, to me, it may be a bit of a non-event and just repeating what he said before. But of course, that is speculation.
Yeah, I mean, I don't see the market pushing too much either way. I mean, it's, you know, maybe he'll comment on yields and real rates, given what we've seen in yields. Real rates is something that they have been banging on about for a while, and we're definitely well into that territory now. I think it's a bit early before he starts putting limits on real rates. Do you think? You know,
no. Oh, he won't.
Exactly.
You don't really put limits on real rates, because for your investor, for your saver, those who have savings, that's actually pretty cool if you have real rates which are a bit high. No, I don't think he will go there. What he might say is that he judges that they are roughly where they are, but where they want to be, which he already hinted some sort in some way in the last interventions he did. So because there's always speculation about this the framework as well. I've read something about that, but really I don't think he's going to give us too much news this time. As I said, the best I think we can get is that he comes out and says that they are relatively happy where they are.
Yeah. And but the real rate thing, you got to look at two sides. You got the real rates, yeah, it's good for savers and the like, but then rates in general, it falls into the tighter financial conditions as well. You know, they're already worried about mortgage rates getting up to 8% over there. So that's the other side of the rate issue that you might be keeping an eye on. Because if those financial conditions tighten too far, they will put the squeeze on the economy. But anyway, yeah, I think he'll probably walk, like you say, walk out the middle of the road, a bit like the FOMC. There's no real expectations in the market that are too hawkish, too dovish. It's the higher for longer message he'll want to keep in, and those expectations aren't getting pushed around too much at the moment. So there's no need for him to tip the apple cart, if you like. If it ain't broke, don't fix it. So yeah, maybe it'll be a boring one. It's bank holiday weekend for the UK, so hopefully it is a boring one. But anyway, that's for them. We can talk about Jackson Hole later this week. No other headlines really, apart from back to the Saudis, and headline just out a few moments before the show started that Biden is considering meeting with the Saudi Crown Prince on the sidelines of next month's G20 in New Delhi. This is all about, they call it a mega deal. This is all about keeping relations going with Saudi Arabia, influencing them in further peace measures, if you like, easing of tensions with Israel, anything like that. Not anything that's it's all about security, so it's not really anything that's market sensitive, if you like, but maybe positive for risk overall. Just that you rather have peace than tensions, so that may be going ahead. Like you say, it's funny, you get headlines like that after or in the middle of just before the BRICS meeting, where the Saudis could have a big influence in that as well. So all geopolitics at play there. And finally, last week, the EU hit their gas storage target ahead of their November deadline. They got storage levels up to 90.1%. This is a big drive they've obviously been doing since the Russia invasion, trying to make sure that they have enough gas supplies or storage ahead of the winter. However, there is not enough storage for all of Europe's gas demand. So everyone in Europe, the powers that be, will be hoping for another mild winter rather than a heavy cold one, and then that won't put too much pressure on supplies, prices, and inflation. That's all I've got. Kay, anything I've missed or anything you want to interject?
No. I think you covered everything. I was wondering this morning why euro is ticking up like it does. I don't know, is it the positive gas storage thing? Perhaps one of the people who is tuning in knows why it's going up, but quite perky on the crosses again. Yeah,
It's looking a bit risk-on-ish. Oil's up a bit as well. Stocks are back up. S&P is just bouncing back a bit. It might just be a case of no news is good news at the moment. This morning, early on a Monday. If we look at the S&P, for example, we had that little breakdown. We had the breakthrough 43.80, set a little intraday support at 60, broke that, bounced back above. Now we're holding back above it. Now we've broken above 43.80 again. It's all small moves. This is all small stuff. When you're looking at it in the wider trend, even if you go something like an hourly, the breakdown that we had through 45 and the breakdown through 44.5. So it's all small levels. Nothing really changes unless, we get above this area, 44.5, 44.60. But the small steps all add up. If we get ourselves back above 44, 44.10, that might change the picture complexion a little bit. Certainly it might solidify at least a fairly longer term low, be that in hours or days. But price action wise, again, if you're looking at catching the knife, we had a level down here, 43.30, didn't quite get there. This 43.60 now potentially has become a level. And if we hold this 43.80 break, then it will just solidify this whole area. So if we do get another move down here, watch for these levels. If we hold them, we might find us going sideways a bit. It might indicate we've got a bit of a bottom starting to form at least. Obviously, take out this low pretty quickly, 43.60. Take out that low pretty quickly. Then we've got. Then we're still back in the bearish trend that we've been seeing for pretty much all of August. As Kay mentioned, the euro having a little bit of mooch up, getting above 109. We had a little move into the zone. We're finding this 108.70 holding again. It's really is a funny area down here. We got into the middle of the zone, but now we're just holding up here again, getting back into the 109s. Some small levels all the way up. Really, the big level gets back up here into 110. But watch this middle 109, 40, 50 area as well. If we do have a climb back up there, if we start to find resistance into that area, again, it just keeps the bearish play on. So we need a move above that to take off some of this bearish pressure that we've been seeing. But euro's a bit more sideways at the moment, isn't it, mate? It's not really looking to go anywhere significant again, is it?
Crosses. Looks like we are only trading crosses in that stuff for the time being, and yeah, I really do not have much to say about the euro dollar as such, because I kind of don't know, to be honest. Yeah, it's a bit. I was just while you're looking at it, just looking at the daily, if there's anything to learn from the clouds, but there isn't really. We fell through last week, but then we're just hovering below. But it's also not really overly significant, because it's relatively quiet and tight on the daily moves. So yeah, there's lines to draw. There's as you say, a lot of levels in between. But then when you look at how things work, or when you look at how things move, it seems to be more crosses than anything else going on in the euro dollar. It's a difficult call.
Yeah, I mean, dollar sterling's having a bit of a climb up again. Let's come down to a shorter time frame. Stick it on that one. That should be clear enough. Yeah, so we had this move under 85.50, which had been a bit of a support level going back late July. Couldn't quite get down to the 85s, pulling up around 20s, which has been a bit of an on-off area as well. Around there, we've had the bounce back above 50s now. 85.70 is going to be the level upside. Nothing looks like it's reversing significantly. This just looks like a little up. There we go. So yeah, it's, you know, we've made a low, we've had a bounce. I'm not really calling this anything significant. This is just wandering around in the ranges, and you know, the same could be said for a lot of pairs. The dollar CAD as well. You know, looking at this one, still long this one. We had this move, we had this 35.5 level, which it held as resistance. Then we had a break, failed on that break up into the next level, back below, holding below this 35.5 level, means we've got to do all the hard work again. It's a bit like the S&P in reverse. You know, we had that 43.60, we broke it, now we're holding it again. Well, 35.50 is the number for dollar CAD. That keeps us in the trend. Long way to go before we start to break this trend, this leg up from the 131.5s. 38.2 fib doesn't come in until the low 134s. So the big levels you've got to watch out for here are 135, maybe 134.90, and then down to the bottom of this area here. If we're under there, then that again is going to solidify these highs. But we just need to see what's happening today. Is it a bit of risk on, or, you know, no news is good news, as opposed to any news being a real driver. As mentioned, oil is ticking up a bit today as well. So that's probably why the CAD's gaining a bit. But if we're going to break this trend, we really need to start getting back below some of these levels. So if you're trading things today, don't get too sucked in that you've made a top up here. You've got some conviction to short against this 35.50 and keep it pretty tight if you get another test. But if you get a break, then we could be on to continue the trend. So you don't want to be putting a lot of money in those sort of trades. But if you start getting these levels broken, then if you're looking for shorts or in shorts, that's what you will want to see. That's where you can maybe push the trade a bit further. Kay, you got anything you want to look at particular this morning?
No, not really, but I can show a few things.
Yeah.
As usual, I'm going to start with sharing this one, which are the short-term interest rate differentials between euro and the dollar. And as we can see, we are still trading along those lows. You guys can see my screen, right?
Yeah.
Yeah, so we are still trading along those lows. So as you know, I'm always keeping a very close eye on what they do, because these differentials have been a driver. You know, if you look at the latest setback in the euro dollar, or you can compare it to other currencies as well, in to move higher in the dollar, has been driven a lot by interest rate differentials as usual these days. And it's still hanging around the lows. So that's why I was a little surprised. It may be that, as Saki says, a bit of general weakness. But then if you look at general dollar weakness, Aussie dollar, for instance, is exactly where I saw it when I walked in this morning, and dollar yen is actually 40 points higher. But yeah, the euro has been pushing up a little bit. Perhaps just, you know, this ongoing euro cross thing, still expectations for the ECB perhaps, and which is a bit bizarre, because those German data are continuing to trade lower. Okay, let's have a quick look at what's going on at the start of the week. So sterling is trying. We have this channel here. Sterling is trying, but it's getting out of it horizontally. So there's not really a big indicator right now. But we do have these intra range levels, and one of those is this little crossroad, which is around 127.10. That's where we stop. A little bit of a thing here. If you want to do some intraday, that may be interesting to watch. But for the rest, it's really preparing for the week. You get to you put your levels in there, and we're having this little trend line here. The underside trend line in the euro dollar is held. So a little bit of resistance, probably 109.15.20, where we saw demand earlier, but resistance again here. So this is a bit of an intra range resistance, and then yeah, we're talking about 40.60 really, 109, 40.60. If that breaks, then I reckon we move back into the 110s. For as long as that doesn't happen, I think we are going to range trade this a little bit, and I don't see too many reasons based on the data for euro dollar to materially strengthen. Okay, the dollar yen, well, we're 145, 146 and a half, and in between you can have this level here. We are on it, 145.85. We stopped in the 3/4 on Friday, but we are already above. I think it's also due to euro yen perhaps, or yen crosses in general. But really, for as long as we hold, yeah, and you can add 144.90, this low here. But for as long as we hold around 145, then we are in the range here. The BRICS story, it depends on what China and friends are going to tell us about competition and things like that. The BRICS meetings can have a bit of an impact on the yen, but it's unsure which way really this impact will be seen. So I guess these are your first points, and if it would go down, then you're looking at 143.90 figure. I'm not going to watch anything much closer today. If in turn we start to break above those levels, we reminded you of the importance of this one, mid 146, right? Then you're looking at extension levels into the 147s, but above there's not a lot that is going to hold this back from a test of 150 again, okay? If it goes down, I said already about the levels, I think if ever we start to break down below 143, call it 143, then the picture will likely change. 143, 143.40. That's your big support zone there now, I would say. Yeah, there's one that I was trying to on a bit of better risk actually. I was trying to sell a few more of those, but it's also surprisingly going up again. I don't know. Is there a bit of worries surrounding the BRICS story that may impact Mexico in a way, the manufacturer of the US? It's possible, but we had this low here on Friday. It was a zone that I was actually watching a bit, but I thought it's anyway. I still think this one is firmly in the downtrend, but yeah. You see, I'm trying to top fish a little bit of that. If we go above this 1870, this middle end of the latest range, I'm probably going to leave the ship for now, but we will see. There's really very little that I want to show because not a lot has really changed since Friday, right? Euronoki broke up, retest of the 1148.50 support, and it's holding right there right now. So for as long as it's above, I would say still bullish. Difficult to counter this trade right now, despite higher oil and despite higher gas prices. The Norwegian kroner is still not liking life too much. We are going to have to break back below 1145 to turn it around. Okay, I think below 1148.50, some may be getting a bit scared. If you go below 1145, then it's probably going to go back lower. Dollar Norway in turn is banging its head up against 1067. The trend line here. Yeah, I think it's more or less rangy for as long as we hold above 1050. Is there anything else? Ali, the question, why every big investor is telling us yields are very high and get ready for crash? Because because a lot of them have been calling this since the since the start of the year, thinking that 2023 was a recession year, and they roll a little bit behind the curve, Ali, and now they are having a hard time to crawl back on what they did. I saw that. Are you talking about who did I see this morning? Allianz saying that they want to double up on their long bonds. Is that the one you're talking about? Right. In the meantime, gold tried, and we still are below the 1900. It's a simple line. It's not really crashing away, but it's still feeling very heavy, and that's due to those yields being big. We have, by the way, before I forget, we do have 20 and 30-year issuances this week as well, and keep an eye on what's happening in the long end of the curve this week. Okay, just trying to tell you what to look out for here, because if the issuances go bad, those yields are going to continue to push up, and we may have more panic cries about possible liquidity shortages. Really, at the start of the week, Ryan, I'm going to leave it here, mate.
Yeah,
there's not
thanks,
much
mate.
more to show.
Yep, I'll just go back quickly. I just want to have a little look at gold before we shut up shop. Can you see my screen okay?
Yeah.
Cool. So yeah, just one little look at gold. We've got this fib, and we've just broken below it. The fib came in 1895, and that was an area of support, level of support when we came off the highs from the 2000s. We're under it now, and we're just starting to hold under it. So this 1895 level could be fairly significant. Also holding underneath the trend line as well, which I'm not paying that much attention to. But as you can see, we've had the break of this fib, 1895, that prior low. So that is maybe an area to keep an eye on. If we're staying below there, if you're looking to get into shorts, that's your conviction line. Doesn't take much above it there, 1900. To be wrong on that one. So just keep an eye on that. We might be setting up a little game between this low now at 85 and 95. So potentially look for a break either side of that range to either continue the trend lower or to maybe look to turn it around. So there's plenty of gold bugs out there, one to keep an eye on. And we'll call that a day for today. Thank you very much. Gets us set up for the week, I hope. Thank you all for coming to the Flow Show. Thank you, Kay, for your input today, and no doubt for the rest of the week as well. Have a great day, everybody. Have a great week. We'll see you all tomorrow.
Have a good week.